All right, let's talk about silver because it just went on a wild ride that left a lot of people scratching their heads. We saw a really sharp, sudden move, and today we're going to break down exactly what happened. This whole thing's just a perfect masterclass in how markets really think.
So you see silver take a nosedive like that, right? And your first thought is probably to look for some huge dramatic reason. But the real story, well, it's a lot more interesting and a whole lot more psychological than you might think. So what was really behind this move? Okay, let's start by playing detective and ruling out the usual suspects. Because to really get this, you first have to understand what didn't cause the price to drop. That's where the story gets good.
First thing you check with silver, right? I mean, did factories all of a sudden just stop needing it for electronics or for solar panels? Was there some kind of sudden global manufacturing shutdown we missed? Nope, not even close. In fact, industrial demand has been pretty solid. So that theory is out. Let's move on to the next likely culprit.
What about some big, scary global event? You know, like a new financial scare or some sudden geopolitical mess that would send investors running for the hills, dumping everything?
And again, no, nothing really new on that front. The world was pretty much the same as it was the day before. So if demand was fine and there wasn't a new crisis, then what on earth happened?
And this is where we get to the heart of it. The answer isn't in what is happening right now, but in what everyone thought was about to happen. In the world of finance, what we expect to happen is often way more powerful than what's actually real. This quote absolutely nails it. You have to remember the market is always trying to look around the corner. It's a machine built to predict the future. The facts of today, they're old news. The real action is in the story the market is telling itself about tomorrow. So here's how the story was building. For weeks, the market was getting really worked up about one thing, the idea of new U.S. tariffs on critical minerals, which, you guessed it, includes silver. This created a massive wave of fear of supply getting choked off, fear of higher costs, and that fear created FOMO. Everyone started piling in, trying not to miss the price spike they saw coming. And that fear, that FOMO, actually pushed prices higher and higher. And then, the future everyone was betting on just didn't show up. The administration suddenly hit the pause button, deciding to negotiate instead of dropping the hammer with tariffs. And in that single moment, the entire reason for that fear-driven, FOMO-fueled rally just vanished into thin air. Okay, so that was the trigger. Now let's pop the hood and really dig into the mechanics of how one piece of news could cause such a massive drop. This is a classic market move that honestly, every single investor needs to understand. This is a textbook sell the news event, but with a fascinating twist. Usually, you sell when good news finally happens. Here, the market sold when the bad news didn't happen. All that fear premium that had been baked into the price of silver was suddenly gone. There was no reason for it anymore, so the market unwound that trade fast. Now, why was silver so sensitive to this kind of news? This is what's so cool about silver. Unlike gold, which is basically just a store of value, a safe haven, silver lives a double life. It's part precious metal, sure, but it's also a critical, can't live without it industrial metal. And this chart just says it all, doesn't it? Over half of all the world's silver demand comes from industry. We're talking about everything from your phone to solar panels to electric vehicles. So any news about trade policy or supply chains, it's going to hit silver way harder than gold. The industrial side of its identity was front and center for this whole event. So the big question, does this mean the whole bull market for silver is over? Is it time to panic? Well, not so fast. We got to put this move into perspective. It's crucial that we zoom out and see the bigger picture. And when you do zoom out, it's pretty clear. Even with this big drop, silver is still way up from where it was a year ago. This wasn't some fundamental breakdown of the market. It was just a really sharp but totally logical course correction based on new information. So here's the best way to think about it. This was a recalibration. The market was just letting the air out of the tire. It was shedding all that froth, that extra price that was built entirely on the fear of tariffs and the FOMO that came with it. That premium just evaporated, bringing the price back down to a level that makes a bit more sense. So what's next? What should you be watching now? Well, the story is definitely not over. From here on out, silver's price is going to be this constant tug of war between these key factors. You've got to watch the trade headlines, keep an eye on industrial data, see what the US dollar is doing, and just get a feel for the overall health of the global economy. Those are the real drivers now. And let's end on this thought. Was this big price drop a sign that silver is fundamentally weak? Or was it just the market reacting to a change in expectations? Being able to tell the difference between those two things, to separate a short-term story from the long-term fundamentals, that's everything. It's what separates an emotional reaction from an informed decision.